Okay. Valuation of assets and liabilities, historical rate, individual foreign transactions continued. Remember that we use the rate that makes the most sense. I coined that term. That is my term. Get familiar with it, right? What makes the most sense? And I love using that throughout this exam for many things because I want you to just think about it. And I want you to align your brain with how GAAP and FASB want you to think. What makes the most sense? For assets and liabilities, we want to know their value at a particular date, so we use the historical rate for that date. Now, that's the current rate, the historical rate, the spot rate, all those are the same rate that we are using for a particular day. So on 1/1 year 3, AB company purchased goods on credit for 30,000 euro. AB paid for the goods on 5/1 year 4. The exchange rates were as follows. Now, this would be a simple question if it was all in dollars, right? We wouldn't have to worry about exchange rates. This is going to be a normal question with normal journal entries. Let's see them here. All right. And now we are dealing with, but we have a little bit of foreign transaction gain, right? Remember, we always credit gains. We always debit losses. That is what we are going to always do. That's just the rule. Now we purchase, right? Purchase expense. And then we have accounts payable. All right. And we are just using our exchange rate on the date, right? Well, what did we do? We purchased them on 1/1 year 3. So we locked that in that price. We use the 20-cent exchange rate. 20-cent exchange rate on that date, right? 300,000 euro gives us $60,000 there, $60,000 for AP. Now, what happened on 1/31? Okay, well, this is 16 cents. This is when we are going to account for this foreign exchange transaction gain. We are essentially recognizing a little bit of a gain here because what happened? Well, we got a little bit more value from the exchange rates. We increase in value. Awesome. Now, what are we seeing here? AB can purchase €300,000 for $48,000 at 1/31 year 3. That's the difference here. The difference between the 48 and the original recorded liability of $60,000 is a foreign exchange transaction gain that increases net income for year 3. So right here, right, we didn't really mean to do that. Whoopsie, but the value changed and we made some money. We made $12,000. Good for us. Now, what are we doing here? On 5/1 year 4, this is when we're actually accounting for the transaction, right? We paid for the goods on 5/1 year 4. Okay, well, we get rid of our accounts payable because we paid it out. We have our foreign exchange transaction loss because, we had a preferable rate, but then rates went back up. So now we have a little bit of a loss to recognize. We still have a net gain, right? We still have a net gain overall. We still have a 6,000 net gain comparing our gain here to the 6,000 loss. But this is what happens, right? We have to now pay those euros, the 300,000 euro at 18 cents because what makes sense? Well, we're transacting at this date. Now, here's an example of where you could have bought a future currency swap, a forward contract, something like that to lock in the rates, but didn't say anything about that in this question. We didn't deal with that. This is the normal process, right? This is what is happening here. So we're giving up $54,000 in value, but at the end of the day, we still made out with a $6,000 difference, right? That's the difference between the 60 and the 54. That's the original foreign transaction gain. So yeah, take a look at these journal entries. I would focus on journal entries more in the asset section or equity section, but if you've got those down, take a look at these journal entries, get familiar with them, make them your friends, and you'll do just fine. We saw a lot. We saw a good amount, and I want you to remember which rate to use to convert currency. Do we use the spot rate, historical rate, average rate? Basically, as I've said, what makes sense? What's the rate that makes sense? You got to kind of think first, what are these rates used for? What do they report? What do they reflect? And then apply it to the different accounts. Lastly, understand the difference between translation and remeasurement. Remember what's reported in OCI and practice these questions. You'll do well. It's a good section. It's a good section. They're all wonderful sections. We don't have anything but great sections here for you today or at any point. Well, thank you for joining, and I'll see you in the next one.